How's it going, everybody? Matt Diamond with Kalshi. Today, we're going to talk about how to trade Nasdaq-100 event contracts going into a major economic event. So on August 10th, there was going to be the CPI report, which is just the inflation report. And that is a major economic event. So there's going to be a lot of volatility on those days. So we're going to structure some trades on how to possibly take advantage of that volatility, specifically on the Nasdaq-100. And I know I touched on this briefly before, but for those who didn't get a chance to watch that video, this is a website that I use to go check out those economic events that are coming up. It's called forexfactory.com. And on the day, it says all the information or the events that are going to be announced or talked about that day. And the stuff in red is going to be considered some of the major events going on. And as you can see, August 10th, the core CPI month over month, the CPI month over month, and the year over year, that was the information that was going to be announced. And that's what was going to cause that elevated volatility on the day. So it's always a good idea to go to forexfactory.com, see what kind of economic events are going to happen that day, and then that's when you can go into Kalshi and structure some trades using strategy around those events. Now let's do some basic technical analysis. On the left, this is the daily chart of the Nasdaq-100, and this is going into the 10th. This is what it looked like. So it was in a range a little bit. Clearly, this is a little bit more to the downside than the S&P 500, but if we look at the right, this is a 15-minute chart. To break it down a little bit more technically. So if we look at this 15,500, just keeping it very simple, not overthinking it, this was a pretty big area to the upside. And then to the downside, this 15,150. That was kind of that prior low. So if you see, it's been in a range. And being that this is in a range, we're going to try to play it a couple different ways. If we believe that the report is going to be positive or that the market is going to react in a positive way to the information that's getting released, then we could look at it and think 15,500, maybe there's a chance that it can get above that and break out of the range to the upside and have a bullish move. Now that's one way to look at it. Now we're keeping it simple. Let's say you have the opposite view. You believe that the report or the information that's going to be talked about is going to be negative and the market's going to have a negative reaction. We're looking at the lower end of the range, call it this 15,150. So if the market has that negative reaction and there is a bearish move, then we would believe it's going to break below the range, this 15,150, and have a weak move to the downside. And this is why it's so important to figure out what has happened, to try to take a guess at to what could happen, because this is where strategy is built. It's just taking some probabilities on what could happen and then structuring a trade, even though at the end of the day, nobody knows what's going to happen. Whether it be using an indicator or some technical analysis, some support and resistance lines like I've jotted out now, we use that information to come up with a strategy, and then we go trade those event contracts based on that. So now let's go structure the trade. So you're going to log into Kalshi on the back end. You're going to type in NASDAQ up top, and then you pull up the Nasdaq-100 daily bracket. And now let's talk about that bullish move to the upside first. So that 15,500, like I mentioned before, if we believe that the CPI report is going to come out and the data is going to be positive, then we're going to structure that trade to the upside. And now this isn't going to go to the 15,500 because it's a few days after, but we'll just assume that we can get to that 15,500 level here and above, and then we'll structure the trade accordingly. So at that 15,500, the NASDAQ was trading kind of close to it going into this report. If we believe that there is going to be positive news, that CPI report is going to be a good thing for the market, and the market is going to react positively and there's going to be a bullish move, then what we would want to do is trade the yes contract to the upside. So that 15,500 and any of the ranges above that, we would want to trade yes, because if we believe it's going to break out of that range, have a bullish move, then there is the likelihood that it's going to close in those upper ranges. Now that was one side of the situation. That's if the market reacts in a bullish way. Now let's do the other side of the trade. So let's say that information gets released, it's not good, and the market has a negative reaction, and there is some sort of bearish move. We want to play that bearish move. So the lower end of that range that I had mentioned before, this 15,150, what we would want to do is in the Nasdaq-100 daily bracket, we go to this 15,100 to the 15,200, or even the 1,500 to 15,100, maybe even that one lower. We don't want to go too far out because we want to make sure that the probability is in our favor. But what we would want to do is, assuming there is going to be that bearish move, anticipating that negative reaction to that CPI report, we would want to trade the yes contracts to the downside. Because if that actually happens and the market does end up selling off and it breaks the lower end of that range, then there is the likely probability or a higher probability that it's going to close in these lower ranges on the day. And that's it. So a couple very straightforward strategies and ways that you can trade these event contracts on the Nasdaq 100 going into a major economic event. So that's it for the video. I appreciate you watching. Feel free to like, comment, and subscribe, and I'll see you in the next one.